Welcome to Markets Now. I'm Michelle Work with Brian Grady, editor of Pro Farmer, and a down day in pretty much everything except for the hog market. Brian, grain set back after the WASDE report, although we didn't get a whole lot of really any changes on the domestic balance sheets, but was that actually a little disappointing to some?
Yeah, I think it was disappointing. The expectation was that USDA would cut some off of corn ending stocks again this month after slashing last month, and it chose to pause. That may be the case again in March. The big set of reports coming up at the end of March is prospective plantings and quarterly grain stocks, and so it isn't too uncommon for USDA to punt or pause in February and even March. And definitely what happened in the February reports here with no changes, literally no changes, and the same on the soybean side of things.
Absolutely. We did get some minor adjustments lower in South American production, but what's your sense about, it's really too early to make large scale cuts here, isn't it?
Absolutely. So, I think the biggest thing with Brazil, record crop, just massive. It's quality at this point in time, and it's stopped raining quite as much through central Brazil. So that's going to allow the soybean harvest to advance, especially in Mato Grosso. Um, you know, Probably eases some of the quality concerns at the moment. On the corn side for Brazil, who knows? Because Safrinha, the crop will account for about 3/4 of their total production, and that's planted after the soybean harvest. So both of those are delayed at the moment, and so there's uncertainty. And then you come into play about when does the rainy season end in Brazil, and so that'll have a major impact on the Safrinha production down there. Argentina, it's been too dry. The weather's improved a little bit. Looks like for the next couple weeks at least, they'll have a better rain pattern through at least central portions of the country, and so um, I guess the South American weather situations hasn't improved a little bit. Probably just stabilized some of those crops and the crop concerns, especially in Argentina at the moment.
Absolutely. As we look at the global ending stocks, down about 4 million metric tons on corn, 3 million metric tons lower on soybeans, but does it really move the needle at all?
No, not really. I wouldn't say. I think that from the U.S. standpoint, the market's focused on ending stocks more so at this point in time. From the global standpoint, they're focused more on production, especially out of South America.
Gotcha. So let's talk about in a normal year, we would start trading South American weather after this WASDE, right? But will that be the case this year, or will we be more fixated on these tariffs?
Well, I think the tariff stuff, because of how volatile it is going to take center stage, so to speak. I think that the South American weather still matters and matters a lot, but it'll be pushed to the back burner a little bit compared to the tariff stuff. And the tariffs seem to be completely different this time around than what they were under Trump's first presidency. Very targeted with China in the crosshairs that time. This time across the board, reciprocal tariffs, those types of things, and hitting industries that he feels are disadvantaged here in the United States to increase U.S. production, and so this one's uncertain, and Trump unto himself is uncertain, and so the market is going to pay attention, and this is going to be a daily headline chaser type of thing.
Absolutely. And a lot of volatility ahead as a result of that. When we look at maybe an escalating trade war with China, there's been talk about extending the phase one. Does that dampen the idea that we could even get that?
Well, I think what probably ultimately happens is that China will be held to the phase one agreements. And that was the case for the first couple of years. But after that, it kind of faded off and they didn't meet those agreements. So that will be revisited and probably hold China to those. And honestly, the Chinese haven't really balked at saying they would meet those commitments. And so I think that is something that will happen. The question after that is, do we go into phase two, for lack of a better term, and get another trade deal done? The first time around with phase one will tell us that is not a short process. It takes years. And so we're looking far down the road for something like that to happen.
Gotcha. From a technical standpoint, March corn can't seem to close above $5. We can't keep soybeans above this 200-day moving average. What would it take to, from a bullish standpoint, get us back above those levels?
Well, I'm going to tell you money flow, and with that said, the funds are aggressively long the corn market and they're long soybeans, and so we have to have some sort of a catalyst that probably continues to fuel money into the long side of those markets. But if we get above $5 in nearby corn futures, I think that then you pick off some buy stops again, and maybe you can move to the next level higher. But with that said, we've made a pretty strong move in the corn market and the soybean market for that matter, and so we're kind of running out of steam, so to speak, and we need something fresh to energize these markets.
Gotcha. Wheat didn't get a lot of changes in the WASDE either. So did wheat just follow corn and soybeans lower?
Yeah, I think wheat is clearly a follower market at this point in time. We did see the funds cover some short positions, but they're still short there, and so um, you know there's global production concerns, but it's the middle of winter, and to be honest with you, it's really hard to get the market excited about northern hemisphere production concerns in the middle of winter, and so um, as we move forward into spring, then crops and weather and that type of stuff means more. But as we said here in mid-February, doesn't mean a whole lot to the marketplace.
Cattle markets have triple digit losses there. We've heard about kill cuts. We've had lower cash trade. But is this market technically rolling over, do you think?
Yeah, absolutely. I think a top is in place and likely a major top. The one thing that I've noticed is a change in the trade pattern. What we saw before when we were running to highs was that if the market pulled back, we saw active buyer interest underneath the market. Just the opposite's happening right now. We're into this long liquidation phase, and if we do see a pause in that liquidation and the market moves up the next day or days, we see heavier liquidation pressure. And so that's a definite change in the trade pattern, like I mentioned. Um, where do we stabilize at this point in time? That's probably the key question. We know from a historical standpoint that the cattle market, once it's made these historic runs, pulls back aggressively and pretty quickly, typically. Then the question becomes in 2025 here, do we revisit the highs? And if we do we get back to new highs, or do we stall out a little bit above the current high water marks? And I guess I'm in that latter camp. We'll probably challenge them at some point during 2025, but I don't think we'll get all the way back to the highs that were posted recently.
Interesting, yeah. And the funds, they didn't get in a day, they won't get out in a day, so we'll have to watch their activity. Hog market saw a little bounce there. The lean hog index has been moving higher, and cutout values have made some new highs for the move. Is that what's supporting that market right now?
Yeah, absolutely. I think the pork market is doing well enough that it's keeping packer margins in the black, and that's allowing them to continue to bid for cash hogs and keeping that index pointed higher. The futures are chasing the cash index to the upside at this point in time, so uh, you know from a seasonality standpoint, we see prices climbing into midsummer for the historical high or the annual high. Um, but you tend to see a either late winter, early spring pullback in the marketplace. So it wouldn't surprise me in March or maybe April that we see a little bit of a downturn. But I think ultimately we do climb to that summertime high.
Okay, thanks so much for joining us, Brian Grady with Pro Farmer. That is Markets Now.